Level 1. The Seduction of the Simple Chart. It's a Sunday afternoon, and you're half watching a documentary about Warren Buffett. He says something that lodges in your brain. Our favorite holding period is forever. You pause the TV, you open your phone, and you search how to buy stocks. By evening, you've downloaded 3 apps, read 4 articles, and you're staring at a chart of the S&P 500 going back 100 years. It looks like a staircase to heaven. You do the math in a notebook like a child discovering magic. If I had put $10,000 in this in 1980, you'd be a millionaire. You feel cheated. Why didn't anyone tell you? You transfer $1,000 from your checking account. Your hand hovers over the buy button for a full minute. You pick a stock everyone knows. A household name. A company you use every day. You buy $400 worth. The next morning it's up $6. You check it 40 times before lunch. You tell yourself you're an investor now. You aren't. Not yet. You're just someone with a position. But the seed is planted, and it's the most expensive seed you'll ever plant. Because it's going to cost you years before it pays you anything real. Level 2. The noise and the names. 3 months in, and you've discovered the rest of the market. There's more than index funds. There's growth stocks, dividend stocks, small caps, biotech, emerging markets, REITs, commodities, crypto. Each one has an army of people online telling you it's the only one that matters. You start following 20 accounts on Twitter. You join a subreddit. You bookmark articles you'll never finish. You buy a stock because a guy with 80,000 followers posted a chart of it. It drops 14% in a week. You sell. 2 weeks later, it's back to where you bought it. You learn that lesson and forget it immediately. You try a dividend strategy, then a momentum strategy. Then you put money into a small cap that's going to disrupt an industry. It doesn't. You discover earnings calls. You listen to one and understand about 30% of the words. You feel sophisticated. You buy the stock anyway. Your portfolio now has 23 positions in it. You have no idea why you own most of them. You tell yourself you're diversified. You aren't. You're confused. And confusion wearing the costume of strategy is the most expensive mistake at this level. By the end of year 1, you're up 4%. The S&P is up 22%. You've worked harder than the index and earned less than a savings account. You don't tell anyone. Level 3. The quiet return to boredom. It's around month 15 when something breaks. Not your portfolio, your ego. You sit down on a Saturday and export every transaction you've ever made into a spreadsheet. You calculate your real return after fees, after taxes, after the opportunity cost of the cash you left sitting on the sideline waiting for the perfect entry. The number is humbling. You underperformed the simplest possible strategy by a wide margin. You almost close the laptop. But you don't. You start reading, really reading this time. Not hot takes. Not 10 stocks to buy this month. You read Bogle. You read Graham. You read letters from old men who have seen 40 years of markets. The language is dry, almost boring. And that's when you notice something. The boring people are rich. The exciting people are selling courses. You rebuild your portfolio from scratch. A broad index fund. A bond allocation appropriate for your age. A small allocation for the individual stocks you actually understand. The businesses whose products you'd own even if the stock didn't exist. You automate the contributions. $500 a month, every month, no matter what the market is doing. You delete 2 of the 3 apps. You stop checking daily. The first time you go a full week without looking at your portfolio, it feels like withdrawal. The second time, it feels like freedom. Your account hits $18,000. You didn't pick the top of the market. You didn't time the bottom. You just kept buying. Level 4. The weight of time. Year 4. You're 30-something now, and the account is $64,000. Something strange starts happening. The monthly contributions matter less than the market moves. A good month adds more to your net worth than your job does. A bad month erases 3 months of savings in an afternoon. You have to learn a new skill. Not picking stocks, but not flinching. There's a correction in March. Your portfolio drops 22% in 5 weeks. You feel it in your stomach. You stare at the red numbers, and you do the only thing that matters at this level. You buy more. Not because you're brave. Because you wrote a plan 2 years ago that said this is what you would do. And you trust the version of you who wrote it more than the version of you feeling scared. 6 months later, the market is back. Your portfolio is higher than it was before the crash. You realize something that no course can teach you. Returns don't come from being right. They come from being present. From not selling. From showing up every month with a boring contribution when the news is screaming that the world is ending. You start reading 10Ks for fun, not to trade, just to understand. You open a Roth IRA. You max it. You open a taxable account and automate contributions there too. You've stopped trying to beat the market. You've started trying to outpatience it. That's a different game. And for the first time, you're actually winning it. Level 5. The invisible compounding. Year 8. Your account is $340,000. The contributions are still $1,500 a month, but they're a rounding error now. The portfolio is doing the heavy lifting. On a good day, the market gives you more than you earn at your job. On a bad day, it takes more than you've saved in 2 years. You've made peace with both. You notice something about the other people your age. The ones who earn more than you drive nicer cars, go on nicer vacations, live in nicer apartments. On paper, their lives look better. But you've seen their 401k balances in passing conversations. You're ahead of them by a decade. You don't say that out loud. You've learned that wealth is a quiet thing. Loud money is almost always borrowed money. You start thinking in longer time frames. You don't check daily anymore. Not weekly. Sometimes a whole month goes by and you haven't logged in. When you do, the number surprises you. You had a down month and didn't even feel it. That's the moment you realize the game has changed. You're not investing to get rich. You're investing to stay free. There's a difference, and almost nobody understands it until they're inside it. You buy your first rental property in cash. Not because the math is better than the index, but because you wanted to diversify your income, not just your assets. You read a book about stoicism. It sounds exactly like a book about index investing with different words. Level 6. The architect of a life. Year 15. The account crosses $2.4 million. You don't celebrate. You've watched it cross milestones so many times that the numbers lost their grip on you somewhere around $800,000. You've stopped thinking in dollars. You think in years of freedom. How many years of your current life does this portfolio fund if you never earned another cent? 14. That's the number that matters. Your structure is complex now, but elegant. A taxable brokerage. Retirement accounts across 3 employers you've had. 2 rental properties. A small allocation to private investments through a friend who runs a real estate syndicate. A position in a business a cousin started that might be worth something someday or might be worth nothing. You have an accountant who understands your whole picture. You have a will. You have a trust. You have long-term capital gains planned 5 years out. People at parties ask you what you do. You say your job title. Nobody knows the real answer, which is that you stopped needing the job 5 years ago and kept it because you like it. You've had opportunities to leave and do something riskier. You've declined them all, not out of fear, but out of clarity. You know what enough looks like, and enough is a rare piece of knowledge in a world designed to convince you otherwise. You mentor a younger coworker. She asks how you did it. You tell her the truth. It's boring. It's slow. It's mostly just not selling. She looks disappointed. They always do. Level 7. The apex. It's a Thursday morning in the fall. You're 61. You're sitting on the back porch of a house that's been paid off for 11 years, drinking coffee that costs $4 a cup because you like it, not because you're treating yourself. The portfolio crossed $47 million last quarter. You don't say that number out loud. You haven't said any number out loud in over a decade. The people who need to know. Everyone else is just background noise. You don't manage it day to day. Your advisor and your estate attorney handle the structure. Your role now is to not break it. That's harder than it sounds. You've watched peers with more than you take one bad swing at a business they didn't understand and erase 20 years of compounding in 18 months. You watched another give half of it to a man who sold him a story about a private deal. The final skill of investing isn't making money. It's recognizing when someone is trying to take it from you, wrapped in language designed to make you feel like a fool if you say no. You say no a lot. Most of your money goes to 3 things now. A foundation you started with your wife, focused on education in your hometown. A generational trust for your grandchildren that they won't touch until they're 40, because you've seen what inherited money at 25 does to a person. And a small, almost embarrassing amount that you still contribute every month to an index fund. You don't need to. You just like the ritual. Somewhere, someone just opened their first brokerage account with $1,000. They're checking it 40 times a day. They think it's going to be fast. It won't be. It never is. They'll learn what you learned, 1 decade at a time. And if they're lucky, If they're very lucky, they'll figure out early that the only real secret is that there was never a secret. Just time. Just patience. Just the willingness to be boring while everyone around you is begging to be entertained. You finish your coffee. You close your laptop. You go for a walk.